Rick, good morning, members. It is Tuesday, September the 9th. I hope everyone got through yesterday's rather boring trading day quite well. Of course, today, front and center is Apple's new product releases, which, as I hinted to yesterday, I think probably was at least part of the reason why we saw a pretty boring day in terms of U.S. trading yesterday. Also, remember, we're pretty much just consolidating the massively steep rally that we saw in August. You know, if you think about it, we were just a few weeks ago, seemingly we were, or not seemingly, literally, we were sort of, kissing the 1900 area before reversing higher very, very sharply. We've basically now rallied just about 100 points in a few weeks. That is not to be discounted. So at some point, stocks need to take a breather, and that's exactly what we're doing right now. So if we look at the S&P, and we can just kind of draw some very simple support and resistance lines here. You can see, depending how closely you take this, we more or less have support around 1990, which I discussed yesterday and the day prior. And we got very defined resistance around 208, maybe stretching up to 210 or 211 or so. But then, we're like splitting peas if we take it that close. More importantly, I did say an upside target here, 2010, 2020 could be possible as we take this market one day at a time and reevaluate things every day to kind of make sure we're still on the right side of the market. It's now important to note that the longer we sort of base up here in this above 1990, quite frankly, the more the better the odds get that we push higher, maybe towards 2040, 2050 as a next upside target. It's entirely possible. I know I keep saying both from a cyclical and a seasonal perspective, we should be heading lower or at least topping out. But again, that's the structural underpinning of the market that we're looking at. That doesn't mean we should trade that way. If you would have shorted anywhere, over the past few weeks, you would have gotten your head ripped off. We traded the market from the long side. I know we had a hedge on in the S&P 500 as we got towards the 50-day here, just to kind of see if we were to make a lower high. But all in all, I think we've been staying on the right side of the market, all by trading with very little risk on. In other words, with a big cash position. So I think now the next move I'll be willing to take down my cash position quite a bit, i.e. take bigger positions or at least more positions, maybe say 4 to 5 positions, maybe even 6 positions as opposed to just 2, 3, 4 positions or something like that we've had on for the past month or so. That's where we are in terms of the S&P. Of course, the Nasdaq 100 table will be the one in focus with Apple's new product announcements. So this is pretty much useless to look at. Just look at Apple. And actually, this actually fares pretty well for the bulls because we've now seen a bit of a sell-off into the product announcement. So this is not to say we can do a trade here. We need to see what the next move is before, or the next sort of reaction to the product announcement before we potentially get another trade. So watch Apple. Apple really can have a big influence both on the Nasdaq 100 and then certainly on the S&P, just in terms of the weightings, in terms of and also really sentiment. It's really just that. Weakest link in the block remains Russell 2000 IWM. You can see ETF here, the double top. We are still making a lower high. The question is if that's going to hold. I don't know. No one knows. We got to take it one day at a time. In terms of trading yesterday, I did quite a few things yesterday morning, which is somewhat uncharacteristic of me because I try not to do too many things on a Monday morning. But you can see here, and by the way, if you're a new subscriber, I want to welcome you. Please get to know the website here. Make sure you know where everything is. Year to date, you can see we're still doing quite well. Coming in today with an 80% plus cash position, long Facebook and long Jack in the Box. That's where we are. Let's look at the activity feed. What we do in terms of trading yesterday. Couple things. First of all, came in and we got rid of Whole Foods at a loss of 1.4-ish%. We'll go through that chart in just one second. Actually, let's do it right now. Whole Foods, just so you see, I still like the stock. In fact, I put an alert back on it. If this thing can get back, say back above 39.90 or something like that, I'd be happy to go long. But it's got to show us that it can do that. The stock remains, as far as I'm concerned, in a decent position to do so. And we took full profits in UAL. This is a long position in United Airlines, we made about 3.5% there. I wanted to take some profits. Point one, point two. The stock now is showing a little bit of sign of near-term exhaustion. I'm happy to get back in if that makes sense. You can see this massive base. I mean, it really this has a lot higher room to go, maybe 55 or 60 bucks. But I just want to get out for the time being, as the broader market is stalling it too. And also, I see other better opportunities elsewhere, like for example in Jack in the Box, which is the other stock, which is the third trade than yesterday. Yeah, so that's that. So let's quickly look at Facebook and Jack in the Box. Those are the two positions I have open coming in today. Facebook doesn't take a ton of explanation here. I think it's pretty obvious what's taking place. I've talked about it for the past few weeks every day, and you can see the breakaway gap after earnings. Stock now basically just breaking out of the sort of bullish wedge formation, or the consolidation period that took place post the earnings rally. So we're just going higher here until we're not. So I think 80 bucks seems to be the next upside target. But again, this does very much depend on the broader market's near-term direction. Jack in the Box. This is something that some people tried to play this via options. I could have told you that doesn't work. There's not enough options. You need to play the stock in this one. The setup here is very similar to what United Airlines UAL looked like just last week, I guess. And you can see the stock is just coiling up here below resistance, tightening its pattern, holding the 50-day moving average. All that stuff is really coiling the stock up to shoot higher. Hopefully this breakout will work sooner rather than later. Then we're looking at some things like soda. I've talked about soda. We've had a couple attempts at trades this year. I think we made money in one or two of them. I don't exactly remember. It hasn't been a huge winner though. I still think there's a takeover target here. Stock tried to make a move yesterday. You can see it closed up at 1.2%, but well off the day's highs. So I'm watching this stock. If we can get back above, say, yesterday's highs, about 34.5, 34.50, could be interesting to see if this thing can get legs. EA Sports at EA Electronic Arts. EA here also still working on this pretty tight formation, and you see a ton of stocks like this out there, and this is really just a reflection of the broader market churning and potentially making another move higher. So you know, these patterns are not bearish. It really does take, as I've been saying for a couple of weeks now, right now would really take a very bearish move, maybe like a breakout move to the upside and then a massive move to the downside that to quickly put in a top, or something, I don't even know, some external shock that just whacks all these stocks lower. It's possible, but the construct of these charts is still very bullish. So I still want to trade alongside. As a last thing for today, guys, please keep in mind as we go to today, as the Apple stuff comes out, markets are gonna react a little bit to however they want. But keep this. Don't let the product stuff, the product announcement, iPhone stuff, keep your eyes off the ball. What's important to understand is that we're still within this consolidation phase in the S&P. So as long as this doesn't resolve to the upside or the downside, the broader stock market is going to be quite limited in terms of what it's going to be doing. In other words, single name stocks. So even if we play stocks like CRM, like Salesforce.com, like which I want to buy. I also would like to buy First Solar again. These stocks are going to most likely, or there's a high likelihood that these stocks are going to remain sort of range bound until the broader market can show us what it wants to do as well. So that's it. That's why it's so important to keep an eye on the broader market when we trade single name stocks. Hope this makes sense, guys. If you've got any questions, always please let me know, and good luck out there today.